Hey, what is going on, everybody? Welcome back to another video. In today's video, I want to go over option trading on Robinhood. So this is for beginners. The goal for today's video is to help you understand what option trading is and how to do it on Robinhood. Robinhood is a great app. It's very user-friendly. It's what I personally use to trade, and I feel like it's a good starting place for most traders. So before we really get into options specifically on Robinhood, the most basic way I can break it down is there's a call option and there's a put option. Call and a put is like placing a bet saying the stock is going to go up or down. So if you put a call option out, then you're saying, okay, this stock is going to go up. And if you put a put option out, you're saying, okay, this stock is going to go down. So let's jump into kind of the technical part of that and how to do it on Robinhood. All right, so as you can see, we have our investing portfolio pulled open. What I would tell you is go over to your three buttons to your account and go to the three buttons on the top, and you have to make sure if you're going to trade options that your account is on a cash account. You can't do it on a margin account. They will put limits on it and stop you from basically trading. So what you want to do is go to the menu and you're going to want to go to investing. And here you can scroll down to your cash, to your account type. So it says account type there, and you're going to, it may say margin for you, it may say cash. If it says margin, make sure that you're switched to cash account. That way Robinhood doesn't try and limit or block any of your trades. So what this cash account means is that all of the money that you're going to be trading with has to settle for, I believe, 24 hours before you can use it again. So once you've got your cash account set, then we're good to start learning how to trade. So we're going to use the S&P 500 or the SPY as a good example, as this is one of the best index funds there is. So for the S&P 500, if we're looking to trade options, you go to trade and you click trade options, which I'm sure if you've clicked on this video, you've probably maybe tinkered around with it before. So pretty much there's dates. The dates are important because that's when your option expires, okay? So there's different ways to play the options. You can go with a long term, like for example, if we want to go out until 2026 here, you can go long term, and that'll give you a safer investment. However, it will cost more, okay? So that's a great play. That is called a leap, okay? So a leap is going to be about a year out from when you purchase the contract. But for this example, we're going to just go with kind of a quicker, so let's say by February 3rd, which is Monday or tomorrow. Currently it is Sunday when I'm recording this, so the market is closed. So currently it will show you the share price, okay? So the most important thing here is you just hit trade options and then you pick your date. Don't worry about all of this other stuff in here, okay? So February 3rd, and you'll see you have quite a bit of numbers here. What do these numbers mean? So the most important thing is find your share price, okay? So this is our price here. The stock is currently at $598.97, okay? So you're gonna see buy on the top left, buy and sell, and you're going to see call and put, okay? So what these means is you're going to pretty much like I mentioned at the beginning, buy and sell your call or your put, okay? So do you think the stock is going to go up or down? Now, this is a whole kind of different aspect of trading, but you have to be educated on what stocks you don't want to place bets out there without knowing anything about what's going to happen. This is not gambling, okay? So I recommend you study up, stay in tune with the people that are on the market all the time that know more than us. We live in a day and age where there's readily accessible information all over the internet. So you can learn about what other people are doing and kind of maybe try and mirror their trades. If you think that the stock is going to go up, then what you want to do is you want to click on the strike price. So the strike price is the number that says 600 call or 599 call. So that's the price that you think that this stock is going to go up to or below. Okay, so in this case, we're doing a call option. So let's say, I think that this stock is going to be at 598. Okay, so we can buy this option, and basically the cost of it is $4.88. With options, the reason why you can make and lose so much money is because you can't just buy one. You have to buy 100. And so if you see here, if I click in that I want to buy one, the cost is $497.04. Okay. And so let's say we wanted to purchase this option, then we would purchase it. Well, I don't have enough buying power, but we would purchase this and we would swipe up, the order would go through. Okay, you can only trade options when the market is open. So if we were to purchase this, swipe up while the market's open, then we would be holding the stock. Okay, and just keep in mind when you're trading options, the dates are very important. Okay, so that option, if I were to buy it, that would expire the same day that I bought it, which is February 3rd. Okay, so there's, like I said, there's different ways to play this game. You can go long term, you can go very short term, you can kind of do a more middle play. There's a lot of different ways that you can do this. So let's say Valentine's Day, okay, we think that this stock is actually going to go down. So what we would do is we go to put and we would go buy put, and currently same price, $598.97. Okay, I think that it's going to stay below $599. So then we would buy the $599 put. Okay, so you would purchase that. That would be $528. Okay, or you could maybe try and put in a bid and see, you know what, $525 is what I want to try and get it for. Boom. Okay, so that's an example there. Another thing that you can do, which is great if you're a beginner, is just hit add to watch list. And basically this will show up on your main page. And basically this will show up under a tab called Options Watch List. And you will pretty much be able to watch it as if you purchased it. This I recommend to all option traders, whether you're new, you're very experienced. It's always good to have a feeler out there. So you can do, you know, just a watch list position, risk-free, and see how it would have performed. I recommend you start doing this today. Why don't you set a couple, do some research, see, you know, where is the SPY going to be, where is these stocks going to be, and you can set watch list positions to watch and see how your stock would have grown or gone down without actually risking your capital. So that's the most simple way I can talk about options trading. That's how you actually trade the option. What goes along with trading the options is the knowledge of how the stock is moving and when to get out. Okay, so real quick, I'll explain to you stop loss. Stop loss is something that you want to set to keep yourself from, you know, going below or holding on for too long. Okay, I'll use this NVIDIA call that I have for an example. Okay, so currently on Friday I purchased an NVIDIA call because NVIDIA did drop to a low. It is a longer term. The expiration date is on Valentine's Day, so I still have some time to hold it and hope that the stock goes back up. Okay, this is an active stock that I'm holding. The average cost I bought it at was $685 or $685. Currently, it is sitting at $708. So the return on that is $13 before before the market closed. If I were to set my stop loss on this, which I will, what I would do is I would go sell. Okay, and when I go to sell, you can click up in the top right corner to limit order and you click stop limit. Okay, so once you have your stop limit, pretty much the limit price is going to be the lowest price that you are going to sell this stock at. The stop price is going to be where it stops out before it gets to that point. So let's say currently, so remember my average price right now is $695. So I can put my limit price at, let's say, $695. Let's say I want to break even. I don't want to lose any money on this trade. Okay, and then I can say, well, currently the stock is between 7 and 715. So I can put my stop price maybe at 705 and say, okay, if the stock goes up, I'm going to watch it and I can cancel this order and eventually sell at a higher price and make profit. Or I can just let this ride out, not worry about it, and know that I am either going to break even at $695 or I'm going to make a small profit at $705. Okay, so this is the most simple way I can explain stop loss. So let's send that order through. this order is queued for Monday when the market opens. Okay, so that's gonna summarize pretty much this video. Real quick, simple introduction to option trading on Robinhood. Hopefully you got something out of this video. If you have any questions, feel free to leave a comment down below and I'd love to answer them. I will create more kind of in-depth explanations over time, but I think that this is a quick summary of how option trading actually works on Robinhood. The other thing that goes hand in hand with option trading is a good knowledge of the stock market and where you think the stock is going to go. Okay, please keep in mind option trading is very risky. This is not financial advice, and make sure that you always protect your assets and your capital. Thank you so much for watching. I hope you enjoyed the video. Let's have a good week ahead of us.